Hey all, I'm Joel. I'm one of the moderator for this panel today. Very excited to be here. One of the biggest questions in climate tech is how to fund the new green infrastructure and technology development, especially geothermal. I know something about this as a serial founder who has started large software companies with venture capital and who recently started my first infrastructure technology company in the geothermal space, Bedrock Energy. Venture capitalists usually market themselves as funding the future, and it covers things because it covers up this fundamental truth about how their funds are set up to fund specific kinds of risk that is a lot different than all the risks facing geothermal companies. It's never venture capital will never be a large part of the capital stack, but it is a very critical early piece of the puzzle. A lot of people, many in this room, may have been wasting their time trying to get capital from sources that they were a bad fit for. That's why I'm excited to dive into this important topic today. We have an all-star panel. It's exactly the right kind of people representing founders, VCs, and catalytic capital, part of that stack. So I'm excited to welcome everyone to the stage. And we can start off with Alex introducing himself and why he's excited about geothermal.
Thank you very much, Joel, and thank you for allowing me to attend this great panel. So my name is Alexander Helling. I'm the co-founder and CEO of a company called Baseload Capital. And we invest in and develop geothermal companies. And we're doing so in Iceland, Japan, Taiwan, and the US. And I'm quite similar to you. I have a serial entrepreneurial background, been working in Asia for over 10 years, and been starting different companies in different industries, but somehow become quite good at understanding both equity funding, debt funding, project finance, and that I can use while working with Baseload Capital and for geothermal. And why I'm so excited about geothermal, that started about seven years ago when I understood the huge potential, especially if you look at the full geothermal ecosystem, everything from high enthalpy geothermal down to ground source heat pumps and the potential that is in there. So I see geothermal as one of the biggest opportunities within the renewable space. So thank you for having me.
Hi, I'm Caroline de Bossart. Thanks for having me today. I'm a director at the Grantham Foundation and a board member at Project Innerspace. I have a background in venture capital, growth equity, and consulting. Innerspace, I think, needs no introduction for this audience, but the Grantham Foundation is a catalytic funder of early stage climate ideas, including direct equity investments and grants in geothermal. I'm personally so enthusiastic about geothermal that I have a geothermal heat pump in my house, but as a whole, the foundation is incredibly excited about the potential of this for baseload energy and a number of different applications and co-production for energy transition.
And finally, Dan.
Thanks, Joel, and hi, everyone. Great to be here with you. So I'm a founder and a partner at Deep Energy Capital. Investment background, I actually spent about 20 years working with some of the largest investors, big pension plans, sovereign wealth funds, insurance companies, designing investment strategies, and helping them deploy capital. Was puzzled really by energy markets, and in particular geothermal was a question mark for me as to why it wasn't more capital going into the space and why it wasn't a larger share of primary energy. And that's what led me really to found Deep Energy Capital. We are looking to be a conduit to open up investment from large institutions into the space and hopefully unlock greater geothermal infrastructure investment going forward.
Great. So let's just jump right into it. Maybe we can start off with Alex. Is there something wrong with VC for geothermal? Are there other forms of high-risk capital that are better suited, or is it just something that's wrong?
No, I don't think that the VC is wrong for geothermal, but it always depends on what capital that you're looking for and in what stage. And I think traditionally, tech VCs, you want to see a technology that can deploy at scale, and that's what you want to invest in. So if you have a novel technology, going into the geothermal, I think it could be a perfect fit. If you go into, more project development or, where you have not that high returns, but maybe long-term cash flow, that might be more suited to institutional investors or private equity. So, I wouldn't say that there's anything wrong with venture capital. I would say that, for us as entrepreneurs or CEOs or, CFOs, when looking at what kind of capital do we need, trying to understand what different types of capital there is and where you can actually, and, what is the best suited capital. And that might be, if you're a startup, it could be pre-seed, seed, VC growth firms, or if your project development, that could be more for hybrid debt facilities, and you have all of these different kinds. So I would say that understanding what type of capital you need is the first, and then VC could be very well suited for you as a geothermal company as well. We have when we started Baseload, we took in several VC investors here, even though we focus on investing and developing projects. So it works.
And Caroline, you come at this from a completely different view because you represent a different part of the capital stack, but I know you work with a number of venture capital funds. What's your view on whether something is wrong with VC for geothermal?
Yeah, Alex put it well that sort of venture capital has its place, but I see this kind of widespread disjunct for climate tech in general. I think not just geothermal, but there's specific reasons why financing is so problematic within this space. For climate tech in general, we're trying to use this financing mechanism originally designed for rapidly scaling, capital light, often software type projects, for now something that's capital intensive, has a high tech risk, real world projects. And that doesn't always align necessarily with investor mandates and the kind of capital that I think developers and innovators and entrepreneurs in this space always need. Geothermal can be especially problematic because for many projects up front, you have this almost kind of binary drilling risk. We're going to take 50 million and we're going to drill a hole in the ground, and we hope that we'll find the right conditions when we do. And that's something that Project InnerSpace, through its work on improving the data sets that are out there, has been trying to address. There's also technology risk. We're seeing the feathers and the enhanced geothermals of the world, the advanced and open source systems and others that have made some fantastic breakthroughs, but you still have some, I think, questions to answer before they can fully get through the TRL levels. And ultimately, kind of what returns some of these projects engender at the end of the day, and some of them may be utility type projects. So in geothermal and beyond, I sometimes see, we fund people at the very early stages, sometimes when they're still in university labs. So we fund these kind of novel IP type ideas, but I often meet people who have a fantastic idea for a project development company, and they go to venture capitalists and are unable to fully enunciate what their novel IP is and get knocked back. And that's why Baseload Capital and others, I think, are so valuable in this ecosystem.
I mean, and Dan, lastly here, you actually came into geothermal specifically because you thought there was a gap with financing and chose to start a venture capital fund. So I'm curious how you feel about that question.
Oh, definitely. So I'd agree with Alex and Caroline. There's a competition for capital, right? The only time it's ever easy to get money is when you don't need it. So invariably there's a competition. I think in the industry we need to do a better job of educating investors on what geothermal is. If you think about it just in the context of most other infrastructure investments, construction projects, the biggest hot potato is what they call ground risk. And that's really, what is that? That's 10 meters to 50 meters below the ground. Here we're talking about thousands of meters and who owns that risk. So we need to do a good job of educating the financial markets about geothermal, the advantages as well as the risks and how those are mitigated. I definitely think there's an opportunity, though, to deploy or access financial markets in much greater scale and allocate or bring in that capital to the space. They're looking for attractive investment opportunities. They just don't fully understand geothermal. A lot of work needs to be done around that. And then we need to improve the risk return profile associated with geothermal projects. And Caroline talked a little bit about that binary resource risk, exploration risk, which I think is the crux of the issue.
And I think there was actually a question that came in from the audience just now. I think is kind of interesting. I'll just read it as is. Most of the panelists seem to think that venture funding is working for geothermal startups. But having been involved in 100 startup pitches to VCs, none of them were successful. Something gives here. Where's the disconnect?
I think we're all agreeing that venture capital is an interesting and valuable part of the capital stack. But there's an ideal capital stack out here, and it's not wholly venture capital. So sorry, go ahead, Alexander.
No, I agree, and I think one important thing to remember is when you're raising capital, you're looking for one investor, you only need one, right? So you need to get that one investor that actually understands the geothermal field, and they exist out there. And I agree with that. We need to support to help educate the investor. What is geothermal? How do you look at the risk, both from a technology standpoint, from a project standpoint, and where do they fit in with the mandate they have from their LPs, and et cetera, right? But I think having worked with a lot of VCs, going through tons of them that were not interested or not ready for geothermal, there are still a lot of them out there that do understand the risk. So I would work on the pitch, trying to understand what the investor fits what you are trying to do, and then try to go for them to narrow it down.
I'll jump in here too. My experience starting a venture, I've done a lot of angel investing as well, and have worked with venture capital funds for a long time. Starting a software company where all the capital, literally every single dollar of capital we used to start the company came from venture capital funds, and been in a cultural environment in the United States and other places for the last 15 years where there's a zeitgeist around venture capital are the investors, the power innovation, kind of hides the fact that when I've moved into an infrastructure business, I'm like, wow, if I actually do use venture capital for all of my money, I will have no part of the company left. We're successful. I need to find ways to layer on additional types of capital, debt, and different kinds of insurance products, and many other things to reduce the amount of dilution that I have. And I think it's sort of a nuanced approach to thinking about finance. Because it's a lot easier to think about finances here's an investor and they give me lots of money and I start my company. And that's, I think, really true, Caroline, to your point, to a very new company, pre-seed, seed, maybe even an A. But when you get into developing and actually deploying projects, you need to be able to show that you can be, capital light.
And Joel, just to pick up on that, if you think about that unique situation of geothermal companies, right? They're not a capital light type of a product that they're producing. So it's really quite sizable tickets which are ultimately required. And even if you're looking at VC funding for your top co, you need to be able to show and demonstrate what your path is to the market. And that's ultimately a capital intensive project. So you can look at the market and really break it down according to sources of capital, the VC you talked about, infrastructure. There's infrastructure investors out there whose ticket sizes are several $100 million. That's the smallest allocation they want to make. Their time horizon is potentially perpetual. They may be much, much better fits for a geothermal project if you can fit their risk return profile.
Yeah, we are getting a lot of questions in the same vein. There's probably 6 or 7 of them here that are very similar. I'm going to pick one I think is pretty interesting. So venture capital is stuck on its 20 plus. I'm just going to read them as they're written because I think that there's also some information in there. Venture capital is stuck on its 20% plus return expectations. Geothermal can't make that probably ever. How should startups and developers approach this when they are too early for project finance, but are below the return expectations for VC? This feels like too much of a valley of death.
I think venture capital is stuck on its 30% return. Maybe large scale private equity is your 20 to 30% valley.
Yeah.
when I think about the ideal capital stack, just to think about something you said earlier, Joel, you mentioned the word insurance, and I wonder if there's a space for new types of financing that we don't currently see represented in the market at scale. One of those could be an insurance product that helps kind of de-risk, particularly the kind of upfront capital intensive projects Dan was talking about that involve, particularly drilling and for geothermal. Another could be first of the kind funding that is grieved across the climate tech stack, because we stay valuable in a lot of these projects where you really need to kind of prove out minimum viable products before you can be truly commercial, but you don't necessarily want to do that through equity. And in battery recycling, we've seen people raise hundreds and hundreds of millions in dilutive equity. It's not necessarily the ideal approach. I'd love to see a kind of first of a kind fund or that takes a more project finance type approach to something like this.
Alex.
Yeah, no, I would say that, saying that it's below 20% and you cannot reach over that is, according to me, wrong. I would say that most of the geothermal projects, and of course it depends on where you are, but the project IRR are between 10 up to 15, 18%. However, if you then lever that up, your equity IRR will be significantly higher than 20. So, it comes down to how do you structure your projects? How do you use equity versus debt? How do you use project finance? And how do you use hybrids in between? So saying that you do not reach that hurdle, I would say, if you only do 100% equity, that might be right, but that's not how you plan or execute, basically any project, or especially not when it comes to infrastructure, right? So I would then look at it in, what will I use the equity? What do I invest the equity in? How will that equity take me up to a point where I can add leverage to increase my equity IRR to actually reach that point? So because it's you have a lot of different capital pockets that you can use, especially when you're moving further up the value chain. So I would say that you can reach those numbers. You just have to plan it. You have to make your investors, both the VC investors and either the debt investors or the infrastructure investors, align on your project plan and how you plan to allocate that capital in order to reach the returns that are a good fit for everyone involved.
I think that's exactly right. I think even for people who are pretty sophisticated in startups and science and all sorts of things, like understanding sort of that math, the sort of like waterfall math of how you get back into the IRRs and how you break up that risk is extremely complicated. If there are people out there looking to get funding, I would suggest that you find people like Alex and Dan and Caroline or me who understand that in a way that can actually be helpful, because I think it's not something that's easily learned. It needs to, a lot of times it has to be taught. We got a lot of other questions here. I'm curious, because we had this conversation when we were preparing for this panel about how, one of the core issues that people feel when they say there's no money available to get these things started is actually that there are a lot of the largest pools of capital that finance other infrastructure assets are just not in geothermal yet. And I'm curious if what you guys think about what needs to happen to encourage those large pools of capital to get involved, and what that might look like.
So maybe let me take a first crack at that, and others feel free, please, to jump in. From my perspective, working with a lot of those large pools of capital, the first part is just understanding where to enter those organizations. And we've talked a little bit already about venture capital, private equity, infra, and there's sub asset classes within there. So make sure whatever your proposition is, whatever you're pitching, it's going to the right entry point, and your narrative is consistent with that. These large institutions have very clearly defined criteria and investment frameworks. You're not going to change those. So understand where to enter. I think the next element is then just really education. You can walk into some of the most sophisticated institutional investors, and they've done everything almost under the sun, but they've not spent much time with geothermal. You're going to have to invest time to educate them on what it is, how it works, and how it potentially fits within their broader portfolio. And the final one, we talked a little bit about return. I would really focus on risk. and how do you fit the risk profile of whatever you're presenting with the criteria of that investor. So specifically, VC is going to have a very different type of ticket size relative to infrastructure. Okay, what is the time horizon? VC tends to be 5 to 10 years, whereas infrastructure allocations can be 10, 20, 30, or even longer years as far as time horizon. And the big one is downside risk management, the binary risk around resource and exploration risk. And this is where anything you can do to try and modify, mitigate that binary risk, the resource risk, be it financial structuring or insurance or different technology, diversification, that is going to be critical to getting into those large pools of capital. And that's really what we're experiencing.
I would add to that, since you mentioned in our last call, there's a scale risk here too. Like these large pools of capital don't want to deploy $50, $100 million. They want to put hundreds or billions to work. And they're only going to make those small bets if they have a view that your next project or 5 projects will be in the billions and they can really deploy lots of capital. And a lot of times I think people, especially at the early stages, are only thinking about the first project. They never really sell that vision of like, hey, you do this for me and I will make sure that the next 5 projects go to you. Alex, I mean, we have a bunch of questions here that we can jump on. I don't know if Caroline or Alex, you have thoughts on that question.
Maybe just to add on to what Dan was saying about education, if you're these larger infrastructure investors do really deep diligence, and one of those is on you as a partner. And if you're new to project development, or if you're new just to this firm, thinking about what your team brings to the table and their different skills and experiences they have to help de-risk yourself as a partner, probably makes for a powerful statement.
And no, you go ahead, Joel.
I think this can be a quick one, but this one says funders don't understand geothermal, and there's 3 of you that invest in geothermal, and I wonder if that's your thoughts on the space in general too. Like, do your colleagues in the investment space not understand geothermal, and is that part of the reason it's holding it back?
Maybe part of the problem is we've stuck this pin in this part of climate tech and called it geothermal. But there's so many different applications, so many different use cases, so many different grades of heat, co-production, tools and systems, business models that you're talking about within that. It's actually a gigantic field of its own. So there's probably many people out there who don't understand geothermal, or maybe understand part of it. They understand heat exchangers really, really, really well, but they just never thought about electricity generation or industrial heat or something else.
I would agree, and I think one, for investors or impact investors or institutional investors looking into renewable energy, then it's been a lot of investments into solar and wind the last 25 years. There's been lots of projects, lot of technology development, and it's been growing like crazy, while geothermal have been quite on a steady growth path. You have a couple of new companies, couple of new projects every year, but no major breakthrough, except for ground source heat pumps and district heating, where that's been increasing exponentially, right? So I think for all of us, when we're speaking with our colleagues, other investors, we also have to look at the whole geothermal ecosystem, because if we can teach them not only to think about geothermal as electricity or heat or mineral mining or cooling, if we can get them to understand that full picture, it will be easier to see where they can actually fit in. If they fit into one of those sectors, it will be easier for them to learn and get to know the other parts of the geothermal ecosystem as well. So in general, I would say that we need a lot more investors, a lot more technology companies, a lot more development companies into this sector, so that we actually can get successful projects, which then will drive also the capital. Because as you said, Joel, many of these institutional, they want to deploy billions of dollars. So they don't want one project over here and one project over there. They want to see that if we go into this industry, start to understand and learn all the risks about it, we want to see that we can deploy capital for the foreseeable future.
And that is, I think, I would double click on that or triple click on that. the biggest institutions in the world, when they make these kind of billion-dollar bets, they're not just putting money. They have teams, and these teams get experience, and they get networks, and they go to events, and they host dinners, and there is an ecosystem that is created every time one of these big institutions makes that kind of bet. And it's important that those pools of capital come to the space, because it'll encourage people to get smart on those spaces too.
Yeah. I was just listening to this. I find it, so it's not only primary investment, it's really interesting. If you look into the marketplace, there's very little in secondary sales. So it's interesting because it means that I think investors, in many other asset classes, they see multiple opportunities to buy an asset. Yeah. It's not happening in our space. I think the reason why is that the assets are actually so attractive, right? Once you develop it, you want to hold it, which speaks to the asset class, but also presents a challenge because you don't see so many assets going around in the market, and hence people don't have as much exposure to them.
Yeah. All right, there's a question here I think is really interesting. What's the panel's view on why oil and gas venture arms aren't piling onto the space even more than they have? Where are the obstacles?
Good question. I don't know, but I would guess that, speaking to a lot of them, many of them don't have the mandate to go into geothermal. They have mandate that, to invest in solar, wind, hydrogen, CCUS, you name it. And I think that many of them are starting to change there and look into geothermal and how they could leverage the knowledge that they already have. But I agree, they could do a lot more.
I'd
agree with that. Sorry, go ahead, Caroline.
Thank you. I wonder if it's a cultural question. That some of them are, Nabo's, I'm never sure if I'm pronouncing that correctly, has investments in GA drilling and a bunch of other early stage geothermal companies that is a decently broad portfolio. But I heard a story recently from an oil and gas company, and they said, our team in country X has just started their own geothermal division, and they reported it up to the C-suite. And the C-suite were astounded, and they said, well, of course, we've got all this drilling skills, we've got all the geological knowledge. It's a no-brainer for us to be actively investing in this and operating in this space as well. But that initiative came from the team on the ground. It didn't come from the top.
But we have it in Baseload Capital. We have Chevron Technology Ventures as one of our shareholders. We also work with Chevron New Energies, for example. So, we work with them, and that was exactly the same reasoning from their side. We have the knowledge. We have been, we were one of the biggest developers of geothermal in Indonesia, back in the day. So, how can we, work together with Baseload to roll this out, and how can we roll it out in a faster pace? So it definitely do exist, but I think, as I said, it could probably be even more from the other companies as well. And Dan, you disagreed.
No. So I was going to give you 95 reasons why you're not seeing more, but maybe that's a reference just to markets that currently and where they're trading in certain fossil fuels. You're definitely seeing, right? So corporate VC is allocating this space. They could certainly do more. Maybe it has to do with the ROEs in the space relative to traditional fossil fuels, and a disconnect there. Payback periods will be very, very different, and I think that does present strategically for many of oil and gas players at a C-suite level a challenge, right? Can they take their investors with them?
Yeah, go ahead, Caroline.
Sorry, I can't miss the opportunity to give a quick plug for Canada here. I was at Pivot Calgary this morning, and so much of the discussion revolved around, we have this incredible wealth of talent and innovation in oil and gas, particularly in unconventional drilling, that's highly relevant to geothermal, and talking about how the two industries can work together and how they quite naturally fit together.
Yeah. I have a different approach coming from the founder angle. I have seen very few examples in my time. It's now, I think it's almost 15 years of starting and funding companies, where a company that took strategic investment from a really large strategic investor that's in an adjacent or similar space has gone on to be successful. I recognize that oil and gas companies have a lot of this skill set, But I think, Alex has sort of alluded to, there's also cycles and priorities that can change. And when you sort of get into the cycle, like, hey, we have this company who's doing oil and gas exploration, they're going to be our main funder, and they're going to give us all this expertise in drilling. And all of a sudden, their leadership changes, or oil prices go up, or they have a different thing they have to worry about. Your small relative to their size of their balance sheet or income statement projects are the first one that sort of get left on the vine. And I think it's very important, and I've recommended and advised this to a number of geothermal companies, to be very careful about putting boundaries on and relying on those forms of capital for ongoing operations.
And I think I agree with you also, Joel. And usually and always when you look at taking money from VC investors, there are two things you need to keep in mind, right? It's the economics and it's the control. How much control do you give up? And if you're going to work with them and they, you need to make sure that you bring in the right money and don't give up the control of the company, so that you can run it the way that you want, so that you don't become controlled by someone else. And as you said, if they switch out their management, or you have a different strategy, that you can continue to work the way that you would like to.
Yeah. There's a question here that's pretty interesting. How can VC be better rewarded for investing in geothermal, considering all societal and community benefits? I wonder, if I take the question and I spin it a little bit, we've talked a lot about the risk and reward for investments. Like, I'm going to take this risk of my money going to zero. I expect this return. And I wonder, if each of you wants to take a stab at this, like, what is the ideal capital stack that sort of balances that risk and return, where VC fits in?
Oh, difficult question, I would say. It depends on what you invest in. Like, if you invest in a closed loop system that successfessly commercializes in producing electricity and to a low levelized cost of electricity, that's a game changer. The potential returns are basically unlimited, right? So that's one part of it. The other side, as I see it, then are you looking to get if you're a long-term impact VC, for example, then it might be that having these 15, 20, 25% returns sitting on that, and then exiting after 15, 20 years might be good enough. So I would say it all depends on what type of VC or what you're looking for. Are there unicorns, are the possibility to find unicorns in the geothermal industry? Yes, I think so. But the question is who they will be.
I think the word used in the question here is rewards, and the black-hearted capitalist in me is tempted to say that the results of your investment are their own reward. So maybe if I reframe it a little bit as incentivize, there's kind of three things I think about. One of them is that upfront risk, and we've talked a little bit about products like insurance or other kind of financial structuring that could help de-risk that really early stage capital. One of them is around exit opportunities. This is we've talked about how these are quite long-term projects. You have a great need for patient capital. A lot of VC funds work on these 10-year cycles. You have 5 years to deploy, 5 years to manage your portfolio. Really hard to do that for a much, much longer term technology. So having opportunities to either exit or to manage your portfolio duration in some way, I think is a great incentive. And the third is your ability to spread your risk. And we're now seeing a proliferation of really, really high quality geothermal startups and new technologies, which is fantastic. And that in itself, I think, is going to start this virtuous wheel of helping venture capitalists engage with this.
Maybe we can, I think we have a few more minutes here. So maybe a final question, to double click on that, is first of a kind projects and concessionary capital. Like, maybe you can kick us off on this one, Caroline, but like, where does concessionary capital sort of fit into the stack? Was it going to be required for most of these projects, or is it nice to have?
Yeah, it depends on the type of projects, I think. if you are a Zanskar doing geothermal discovery in a relatively capital light but not risk-free way, it may be less relevant for you than if you're a fervo and you need to need to do a lot of drill a lot of holes in the ground to demonstrate that you can generate electricity at a certain megawatt level. So for that question of that question, I think that it does depend on the project type a little bit, but there's definitely a space for concessionary capital just in helping people prove out the viability of certain technologies. And without that, you can't attract some of these larger government grants, you can't attract some of these larger infrastructure partners, and it's really hard for the industry to scale to a point where it's going to be a meaningful contributor to the grid, for example.
I'd agree with that. I think these very large capital-intensive projects require support, and it's not going to come initially at scale from capital markets. It is going to be concessionary. It is going to be, I think, from governments or other entities which are looking really to take calculated risk. And it's the capitalist in me hates to say it, but I think that's how it gets done. And you see that with, Ever and Sage and some of these other newer technologies. Cracking the nut first time will require support. And then there's a step change, hopefully, in the risk profile associated with those technologies, and it crowds in all kinds of other pools of capital. And that's really where it's exciting, because there's a lot of capital waiting for those opportunities.
There's maybe one more nuance just to add to that, and that's the speed of what we're hoping to do in geothermal. There's a chance that without concessionary capital, there would be many great breakthroughs and developments in this space, but they might take decades. I think the real advantage that concessional capital and first-of-a-kind capital can bring to play here is to make that happen faster.
I would agree with that. I would say that on the first question, is it necessary to succeed? I would say no. I think there's enough capital. You just need to find the right one suited for you. Will it make it go faster? Definitely. Yeah. And will it allow the founders to to move faster, take more risk, and will it allow other investors or broaden the investor spectrum to come in? Yes.
And Alex, though, if I can just pick up on that, though, I think it's all about scale. So if you look at Bloomberg data, last year there was just under 500 billion which went into renewable energy. What went into geothermal, I don't know what the data is, because they don't even report it. It's so small, right? So that's what we want to change, right? So yeah. That's where urgency and we need to move fast. We need to do things a little bit less conventionally, so we get our share of that bigger pie.
Yeah, I totally agree. I'm just saying that is it necessary? Then I would say you with good entrepreneurs and with understanding how investors look at risk, and if you can explain that, you could get it done. But it will go much faster, and that's what we need, right? So I'm all for it.
Yeah, and there's a whole bunch of different kinds of concessionary capital. I think there's a lot of questions. I think this is sort of going back to some of the things we talked about earlier in this panel. You need to figure out where your risk is that is not being rewarded for the venture capital fund. Like, they're just not going to invest in your binary risk of not finding heat in the ground. Like, it's just not something they're set up for, and they're not going to do it. But finding concessionary capital or a first loss provider or government or some other kind of partner or hedge fund that is willing to take those kinds of risks or has a perspective is really critical to then going back to other funders and be like, hey, I want you to invest in my technology company, and I do have some other form of capital that's going to come in and take this chunk that you are not willing to take. And I think that's a really critical component that is often missing from at least from the discussion, because I do think, me as an investor, and I know many of you guys, like, if you saw that, I'd be like, oh, wow, these guys have recognized where I can't play and have solved that risk for me. It makes that investment decision much easier.
We're talking about not just concessional, but catalytic.
Yeah, exactly. We have 30 seconds left. I don't know if any of you guys have a final thought.
No, capital's out
Go
there.
out and
Just,
start
just
geothermal companies.
Yeah. Agreed. Well, capital's out there. There are 3 people on the screen here that are investing in geothermal. So if you guys are looking for capital, you guys can reach out to them and have conversations. Thank you guys so much.